Appreciate it. This topic, I'm kind of excited to do. There's a lot of questions I get around Bitcoin and should I invest and is it worth it? Is it a good investment? And there's a multitude, in my opinion, of a multitude of ways to answer that. One of which is what's your risk profile? We'll be announcing in Dubai. I just joined Centurion Exchange. It's a crypto exchange, and we put together a really cool program. You're hearing about it first here. It will be announced in May in Dubai, and we basically are making crypto investing easy as picking a button. What's your risk profile? Is it low, medium, high, or eco for environmental? And if you say, hey, my strategy is a low risk, low return, you're going to click a button and you allocate money, and then the portfolio will pick crypto. And I designed it kind of like a mutual fund. A lot of people, I used to sell mutual funds. Those of you that don't know that, I'm going to close this button here because in Dubai, they give you a hard time. I used to sell mutual funds when I was in my 20s, and all a mutual fund is a set of investment stocks. And you put money in, it goes into a qualified investment. The stocks are picked by a manager, and the manager gets a little fee, and you hope that goes up. And that mutual fund might invest in early stage technology. It might invest in a region. And what I did is said, let's do low, medium, and high. So really excited about that. But on the Bitcoin side, I always get questions, hey, is Bitcoin a good investment? And we've been in Bitcoin since indirectly 2017, but I'll tell another quick joke. I get interviewed a lot of times and people say, oh, Stephen, do you regret not buying Bitcoin earlier? And I look at him with a straight face, say, of course not. I don't regret not buying it earlier. I bought it in 2012 when it was $3. I bought 1,000 Bitcoin, 1,000 for $3. I don't regret not buying it earlier, but I sure regret selling it. I sold Bitcoin when it got to $5.50 because at that time in 2012, that was a win. You buy something at $3, you sell it at almost $6, you double your money. If we would have known. But since 2017, 2018, we've done everything we can to hold our crypto. And it's been tough. It was up at 20,000 for those of you that remember, and then it was down at 3,000. And it's had a pretty consistent up and down run. And another one of the shortcasts I did the other day says, don't look at the price of Bitcoin when it drops. Bloomberg came out right just the other day. We're in April. Bitcoin dropped almost $6,000 from 60,000 to 54. And the headlines, Bitcoin plunges. Well, if you type in, if any of you guys want to do this, it's quite fun. Go to Bloomberg and type in Bitcoin Bloomberg plunges. And you'll see that same headline in 2021, in January, in 2017. Like every time it drops, it plunges. It's kind of fascinating. If Bitcoin's at 60,000 and it drops $6,000, that looks amazing. It's like, oh my God, it's crashed because it's $6,000. But as a percentage, it's 10%. Take Apple stock for a moment. Apple's trading at about $134. Let's call it $130 for a share of Apple. If Apple dropped $13 tomorrow, who would any of you care? It's $13, but it's the same percentage. $130, 10% is $13. The percentages of Apple and Bitcoin might go up and down. Bitcoin will drop 6 or 7%. So do stocks. But 6 or 7% of 60,000 looks like it's the end of the world. And it's really, really not. So there's a bunch of things we can do around the education point. I'm going to do a share screen here with my top 10 reasons for Bitcoin to get to $100,000. And these are going to be pretty simple. And before I do it, anybody that's watching this, I want to put a little perspective out there because some of you might be saying, oh, well, Stephen, yeah, we're here in April, right? Bitcoin was at 60,000, 100,000, of course. No, I have the podcast to prove this. I like putting things out there. In December of last year, 2020, we're in 2021. We have a COVID gap year. I forget things. In December, Bitcoin had just passed around December 14th, $20,000. It hit an all-time high, an ATH. And Bitcoin was at $20,000. And if you read online, people were like, oh, it's gonna crash, it's a bubble, it's a Ponzi scheme. And I sat down and looked at it. I did the podcast, the 10 things I'm gonna go through with you. I did on December 14th, 2020, and laid out my top 10 reasons for Bitcoin to 100,000 in 2021. And again, looking at it now in April, it looks easy to make that call. At that time in December, a lot more complicated. So let's jump in. Some of these are going to be very easy. Some of them hopefully will educate you. But it's the old saying, tell them what you're going to tell them what you told them. Here's the 10 things we're going to go through. I'm not going to let you read it because we're going to go through each one. Number one, why do I think Bitcoin's going to go up? Bitcoin to me is fascinating for the global access versus a traditional stock exchange. And what I mean by that is in the United States, again, I love the simplified education approach of how I believe I can translate information. In the United States, for the most part, we have three exchanges. We have the New York Stock Exchange, kind of the big daddy. And the New York Stock Exchange, when companies go public, Uber, Palantir, they're usually 10-year companies, 100 million, and the stocks will go up, but they don't fluctuate. They don't go up and down a whole lot, but they're pretty stable. You've got the NASDAQ, which is a little more volatile. And then you have the OTC, the microcap, the penny stocks, the pink sheets. These are the risky ones. What do all three of those exchanges have in common? They're central in the US. They're primarily, for the most part, US investors, and it's a US exchange and it's open in US hours. Now you have a little bit of what's called after hours trading, but for the most part, the stock market's closed over the weekend. Crypto's totally different, global access. Bitcoin is not like Amazon stock, meaning Amazon's traded on one market. Amazon's traded on one situation. I'm having a little issue here, guys. Hang on. I have a battery challenge and I don't know why. I think I just got it fixed. Otherwise, we were going to lose computer. Let me switch to a different plug-in here. I think I can fix this. Good thing I have two computers and two cables. Good, here we are. Stock exchange. Again, Bitcoin doesn't exist on one exchange like Amazon does. Bitcoin as a crypto token exists on exchanges around the world. Bitcoin is on Bitfinex and Bittrex and Binance and HitBTC and Ultra and CoinSuper. It's all over. So these multiple exchanges are trading 24 hours a day. They're not limited to hours, and they're in global regions. So your global access for an asset is much broader than anything has ever been before. There's a certain number of people that can't get access to the US stock exchanges. Bitcoin is a global access. Now this works for crypto too, but we're going to focus on Bitcoin, but you can correlate or translate this to other types of crypto or tokens. So that global access is important. It means there's more potential buyers. There's more potential access. It's traded 24 hours a day, 7 days a week. It's a much broader market than the traditional US stock exchanges. That's why it's important. Number one. Number two, there's a record number of what are called BTC addresses. Basically, BTC addresses meaning there's a record number of people who have come on board and own Bitcoin. There's more and more people that are creating Bitcoin. I'm not going to go into the mining side because it gets more complicated, but more and more people are learning how to buy Bitcoin because it's getting easier to purchase it. And again, I use something, I always use it, I call retrospective evolution. Let's go back to the 30s, 40s, 50s. I'm not that old. I'm old, but I'm not that old. Buying a stock years ago was pretty difficult. I don't even know how you would do it pre-internet, but you could probably buy stock. You probably needed a stockbroker, and there were certain systems. But eventually the internet made purchasing and acquiring stocks easier. Now, in the early days of the internet, the E-Trades and the Schwabs, the websites weren't very good. They were clunky, cumbersome. People were afraid to put credit cards in, but eventually that all got better and easier. That's what's happening now in crypto. Any of you that have ever, I won't make you raise your hand. If you've ever tried to buy crypto, it is a pain. It's a nightmare, but it's gotten easier. Bill Barnhart's done an amazing job. Abra, any of you guys that want a wallet, Abra, A-B-R-A. Abra is a great wallet. You sign up online, you register on your phone, you put your credit card in. You can now buy Bitcoin using a credit card or your bank account into a direct wallet. So that onboarding has made it easier. Why is that important? More people are buying, more people are onboarding, more people are owning Bitcoin. And we're going to talk about this. Bitcoin is a measure of supply and demand. The more people that can buy it, the more people that own it, the more liquidity you have of buyers and sellers. Again, I look at it like a stock. If you're a little tiny bulletin board stock and you have 2,000 or 3,000 potential owners or stockholders or shareholders, you don't have much liquidity and velocity. You don't have buyers and sellers. When you get up to an Apple or an Amazon and you've got millions of shareholders, you've got volatility and velocity in that stock because more people own it. So the more people that own an asset, the more it's going to potentially grow because you have more buyers and sellers. But that process is finally getting easier because it's become easier for onboarding. We now have more mobile wallets. We have easier access to purchase. And again, this is important. Mobile wallets and access allow more people to buy that asset. Again, going back to an Amazon, we have to look at how many people can sign up and get on an E-Trade or a Schwab and try and buy a stock. It's there, but the people that can now sign up using a mobile phone, all of a sudden becomes global. And if everybody around the world who has a phone can sign up, create a wallet, all a wallet is basically your account. If you open up a Wells Fargo app on your phone, the Wells Fargo bank app has your account and your money sits in there. A mobile wallet's the same thing. Abra, Voyager, Trust Wallet, Celsius. Think of it like here's Wells Fargo app on your phone with your bank account and money. Here's Abra on your phone with your crypto account and your crypto balances. It's that simple if we make it simple to understand. So now mobile wallets mean more people have those wallets and can buy more Bitcoin. All of this is going to start making sense of how it affects the price. And hopefully I'm not moving too quick. I'm going to get through this for everybody. And the fourth part of that, the reason again it's important is in, I don't want to call it the real world. That's a false pejorative. In traditional finance, there's basically two types of quote investors. There's what's called the retail investor. Excuse me. The retail investor means a consumer. Most of you are retail investors. You might own stock. You might buy, something online as a stock. You're a retail consumer investor. An institutional investor, totally different. The amount of money and dollars and things like that. So all of a sudden, we have people around the world that, let's say, if you look at it and go, it jumped ahead and back. If you look at trying to buy an Amazon stock, I haven't checked lately. Amazon stock used to be $1,500, I think. If it's not, don't hold it against me. Let's look at what we know and don't know about how you would buy an Amazon stock. Number one, most people won't buy one stock. A stockbroker, a brokerage house, they don't want to sell you one share of Amazon. They want to sell you $10,000 that they buy X number of shares. Now, that $1,500 stock also, up until recently, Robinhood, has done some things. But for the most part, if you only had $100 to invest or $200, you couldn't buy Amazon or Apple before it split. The ability to buy small denomination of Bitcoin means more and more people can buy it. That's important because if you look at a brick of gold, I've done this a lot, a brick of gold, standard bank brick, a brick of gold, $600,000 on average. It goes up and down. A Bitcoin unit, $60,000. And people go, oh, I can't afford a Bitcoin at 60,000. Well, you probably can't afford a brick of gold, but you might be able to buy a $50 gold coin. You might be able to buy a $250 gold inglet. You might be able to buy $50 worth of Bitcoin. But the $50 or $60 of Bitcoin goes up and down as the same percentage as the guy who can buy $500,000 or $600,000. So I want this to sink in for a minute. If you're a big investor, you put $1 million in, you're trying to get a 10% rate of return. You're a small retail investor, you might have $1,000 or $2,000 and you're hoping to get a 10% rate of return. The guy that can only put in $100, if he could earn 10%, that means just as much to him for his $100 as the guy at $1 million. That percentage of return is important. And why is it important? Wealth disparity. 97% of the world's population has never had access to financial instruments. Most people around the world can't go online. Well, it's a little easier now, but they can't really go online, sign up at Schwab or Charles Schwab, try and put in 10,000 US dollars and buy, a bunch of shares of Amazon. It's been an impossibility for a large percentage of the world's population to get access to the same kind of financial instruments that either people in a more domesticized world or the institutional guys or a more investable world. Like America has more investable dollars. We still have a poverty gap. But when you look at some of these other societies in India, China, Mexico, where that average standard of living and the dollars might be lower, those communities haven't had access to traditional investment tools. They haven't had investment options. Again, why is that important? Let's go backwards. Small dollars. To a potential migrant worker, again, I'm not picking on anybody, everything's got to be so PC now, and I'm not always politically correct. I'm politically direct. It's a little different, but let's say hypothetically you're a migrant worker. I'm not picking on them, but you're a worker in Mexico where $100 or $200 is a lot of money potentially to you. And now you could invest it online through a mobile phone in something that gives you the same percentage return that a guy with $50 million gets. We've never had a flattening of the wealth disparity opportunity, where I think Bitcoin to me is fascinating. Somebody asked me once in a room, it was one of these, it might've even been Clubhouse. I spend too much time in Clubhouse now, but the question was, if you could go back in the, not back in the future, I don't think that makes sense. If you could go back in time, what would you do? And I don't remember my exact word, but my exact phrase was, if I could go back in time, I would teach more people to invest in Bitcoin. And then I got accused of being a greedy capitalist because I would have bought it. And I'm like, no, you're missing the point. If there would have been 4, 5, 6, 8, 10 years ago, if these people around the world had understood this Bitcoin asset better, I didn't even understand it. If more people could have bought it at $3, $4, $5, $100, and it's now at 60,000, you've got a poverty gap that could have been closed. You've got a generational wealth gap that could have been closed. Like, the opportunity for wealth disparity should close from a global perspective because of that. Now, that starts leading us to something else of what I call institutional buy-in. I haven't looked at this in a while. Hang on. There we go. Institutions. So what's going to drive Bitcoin's driven by supply and demand. And we'll talk about this in a little bit. Demand is the more people that buy it. Supply is what's there. Now, a lot of people hear about mining. I may cover it a little bit later. I don't remember. Here's what I know about gold. I know gold is about $600,000 a brick. I probably won't buy a brick. Can't walk around with it in my pocket. Not easy. It's not really a currency, Gold could be a form of payment. Some people might accept gold. More than likely, though, I have to convert gold to cash to pay somebody. Bitcoin kind of functions the same. It's $60,000, but it's more portable. I can buy smaller units. I don't believe it will actually be a currency, but it could be a form of payment. Some people will accept it, but more than likely, you'll have to sell your Bitcoin, get cash to pay people in cash. It may change, but that's sort of where we are. Here's what I know about gold. I know that it's mined probably somewhere in Zimbabwe, and that's about it. I don't really know how it's mined. I don't know what it takes. Bitcoin has this whole thing about mining and limited supply. I'm not going to go into it. Here's the question I'm going to pose. Somebody looked at you tomorrow and said, tomorrow, no more gold is ever going to be found. There's no more gold that's ever going to be produced. All the gold that we have is all we have. What do you think would happen to the price? And again, normally we would role play, but if you learn no more gold's going to be produced, the price is going to go up. I can hear all of you, even though you're on mute. It's going to go up. But we don't know that about gold because we don't really know how much is there. But the more gold we find, the harder it gets to create more. So gold invariably gets more expensive because it's harder. What does that have to do with Bitcoin? Bitcoin's fascinating. It has a built-in supply. Again, I'm not going to go totally into it. It's built on algorithms and mining and a bunch of stuff. If you want to investigate it, have at it. What you need to know is there's a fixed supply of Bitcoin that will ever be created. And I believe that number is 21 million Bitcoin units, period. Again, if we went to gold and said there's no more gold, all the gold bricks that's all we're ever going to have. Price is going to go up. Bitcoin's got a built-in scarcity. It also has something unique, just like I talked about gold. The more gold we find, the harder it gets to find more gold, so it gets more expensive. Bitcoin, the way it's created, is called mining. Again, if you want to read about it, have at it. But Bitcoin has this fascinating program that it gets to a point where if it takes X amount of time and energy to create 1 unit of Bitcoin, then the algorithm, the process is changed, and now it gets twice as hard to create a Bitcoin. So now it takes longer. What that does is it constricts the supply where less Bitcoins are being created. So what do we have over here? We have increased demand, more and more and more people onboarding, wallets, global access, small denominations buying Bitcoin, and a supply that's constrained. Price is going to go up. What moves it bigger? Number 6. Now this is happening. When I wrote this and did this, it wasn't happening in 2020. 2021. People are like, no, this will never happen. It's happening. Institutional buy-in. There's a model out there. Any of you, now we're going to move to a little bit more sophisticated stuff, but not overly. I'm not going to talk over your head. Some of this hopefully will be educational. There's a model called stock to flow, S2F, where people are trying to figure out what stocks are going to be based on different parameters. And they have all these charts and graphs, and it's a stock to flow model that people can try and project. And they've tried to correlate that to Bitcoin. I looked at it and said, I call it a C2F, a cash to flow model, or a B to F model, bond to flow. Here's what I mean. And this is happening now, but remember, late 20, it wasn't happening. Institutional buy-in. If you have a company, there's an estimated $2 trillion of cash sitting in the balance sheet of companies in the United States. $2 trillion. That's irresponsible. Any of you have money in your bank account? How much interest is it earning? It's about to go negative. Banks are going to start charging you for the privilege of them keeping your money in the account. Having money in cash is irresponsible. So big companies have something called TMS and CMS, Treasury Management Services and Cash Management Services. It says, hey, as a big company, we've got a couple $2 billion in cash sitting in treasury. How do we manage that? What do we do with it? How do we make money and interest? Do we put it in a sweep account? Do we move it to bonds to be protective? And companies will try and figure out what to do with their money. My theory is, and it's happening now, if companies move 1 to 3% of their holdings into Bitcoin as a qualified asset, as an investment, as a hedge, you're talking about hundreds of billions of dollars moving over. you now have much more buy velocity coming in. And it's happening. Tesla, Elon Musk, I'm going to cover that in slide 10. That'll be my close. It's kind of funny, but Michael Saylor's done amazing. Anthony Scaramucci and Skybridge, these guys are putting together funds to buy. There's insurance companies now that are starting to move a percentage of their holdings, their cash, out of bonds, out of treasury, and into Bitcoin. As these companies do that, this cash to flow or bond to flow model doesn't have to be all of it. Tesla moved $1 billion. I don't know what percentage of cash that is of that company, but I'm sure it's not all of it. But they're like, hey, why have $1 billion in cash? Let's move it to Bitcoin because it's been a good performing asset. So as institutionals buy in, by default, by a fiduciary responsibility, I believe they're going to have to, either on their own or by demand of their stockholders, they're going to have a percentage of their money in Bitcoin as an asset, just like they might have it in gold or bonds. And it's not just going to be companies and institutions and insurance companies. It's going to be pension funds and 401ks. That money at the institutional level is already starting to come in. And that buy velocity is what's starting to drive the price up. So keep that in mind. Number 7, again, I kind of covered this a minute ago, but again, Bitcoin's off of supply and demand. And a lot of times people will say, oh, well, Stephen, Bitcoin doesn't make anything. Like at least Apple makes something. Bitcoin doesn't have any employees. And I look at them with a straight face. I'm like, great. How many employees does gold have? Last time I checked, gold doesn't have many employees. Gold's an investable asset. So again, I think people they start getting confused. They try and look at Bitcoin as a stock, and a stock is tied to a company, and that company might produce or make something. And I don't know that that's the best correlation for Bitcoin. For crypto tokens, I think there's an aspect there. But for Bitcoin, to me personally, it's a qualified asset. It's like gold. You have a fixed unit, a fixed supply, and it will go up. Gold doesn't produce anything. Now, some people go, oh, you can make gold in earrings and things like that. Great. Bitcoin, you've got some functionality too. But for the most part, people don't invest in gold because gold makes earrings. We have to be honest with ourselves. Why do people buy gold? They buy gold because they want it to go up or they want it to stay up when their dollars are going down. You don't buy gold because it makes earrings. So any big investor, and I've heard the biggest guys in the room try and make the argument, oh, well, at least gold can make an earring. I'm like, when's the last time you invested in gold because it makes an earring? Like, be honest with yourself. You invest in gold because you want to make money. Bitcoin becomes that. But now look at what we've got. We've got a couple things working. We've got limited supply that I talked about. So Bitcoin's got a limited number of supply. We've got more and more holders that are coming in, more and more people coming in as buyers. And the weird, sad thing is, and this is what's on here, is you've got a limited supply, not only by design of Bitcoin itself, but by what's called lost Bitcoin. This is one of the unfortunately tragic, weird parts about Bitcoin, and it's starting to get fixed. But in the early days, for us as well, we raised money in Bitcoin, and it came in electronically. And I can't put it in a bank. I didn't have accounts. They didn't exist in 2017, 18. So we had to take the Bitcoin that we saw on the screen and send it out to a wallet somewhere around. I used to have one little treasure thumb drive, and that thumb drive became my vault. If you lose your passcode, it's almost like having a combination lock on the vault where your money is. And if you forget the combination lock, not only can you not get in, nobody else can cut the lock. Like that's what's happened. A lot of people, not a lot, but there's people who've lost their Bitcoin. It may have been on a computer that got destroyed, a hard drive that failed. There was a poor guy on the news not too long ago that apparently threw out his laptop and remembered that he threw it out and it has Bitcoin keys on it. And when he realized that Bitcoin, the amount of money on his laptop was like $10 million, and he knew it was in a landfill. And he went to the city, if you guys can find it, begged them to let him go dig to find the laptop. No. And Bitcoin kept going up. Last I heard, it was worth about 78 or 80 million dollars on a laptop in a landfill somewhere in California that the city won't let him go dig up. So if you invest, having those keys were important. Now it's a little less so. Custody, again, you've got Abra, Celsius, Trust Wallet, BitKeep, Centurion Exchange that we just joined. You have places now where you can put your crypto and have access, but you still have to have private keys to get in. Now, eventually they're going to give you ways to get in, but limited supply by design and lost Bitcoin creates less supply, which leads us to this one. Love this one. HODLs, depending on how you say it. HODL. It stands for hold on for dear life. And no, it's not a misspelling. It's not HOLD, hold. It's hold on for dear life. There are long-term hodlers. And what do I mean by that? Again, look at us. We have Bitcoin that came in at a certain dollar amount. It went up and then it dropped down. You have to have the stomach to hold on to it. It's called hands of diamond or diamond hands. I don't remember. There's some term. But basically, you have to believe that even when Bitcoin drops from 20,000 to 3,000, as a percentage, that's a big percentage. You have to believe that it's eventually going to go back up. Now, again, I correlate it back to stocks, right? I'm old enough. I was in the 90s. The internet was big. You've got Amazon. Amazon at one point was up at like $99 or $100, I think. And everybody thought, oh, it's overpriced. And it crashed, plunged, plummeted to $7, I think. Again, don't hold me on the numbers. I like to tell allegory stories that I'm close on, but not exact. It plunged to $7 and people are like, oh, Amazon's going to fail. It's a failure. Lose, get out, sell, get all your money. Well, we know Amazon basically went back up and has done fairly well. But at the same time, another company, a good friend of mine here, Bill Gross from Idea Lab, some of you may have heard of him or know, launched a company called eToys and pets.com. Pets.com and eToys went way up, and then it went down, and then it went way down and went away. So this aspect of holding, it's complicated and tricky and dangerous. If you're holding on to an asset, you have to believe that asset will eventually recover, right? It's the difference between Apple, iPhone, and BlackBerry. Years ago, BlackBerry, those of you who remember, BlackBerry was doing great. Nokia was doing great. Not so much. So this holder, the hodler, guys like me, I didn't hold. I bought it $3. I sold it $5.50. I wish I would have held my 1,000 Bitcoin at $3, where 1,000 Bitcoin is $60,000. It's $60 million. That one kind of hurts. Like to have that one back, but I didn't. But now so many people that have bought their Bitcoin are holding it. They're not going to sell it. And it's not just the little people, what I call the retailers, right? The retailer says, hey, I bought Bitcoin. Now it's like a badge of honor. I bought it at 11, at 12, at 15, at 3. They talk about it. They brag about it because it's at 60, but they're not selling. And even more fascinating, this didn't really exist as much in 2020, and now it's coming on. Alex Mashevsky, Celsius, all of you check it out. CELSIUS, Celsius. There's also BlockFi, Salt Lending. What are these companies? They are lending platforms for your crypto assets. Michael Saylor, those of you that have been watching Bitcoin. Michael Saylor, again, let's number 7. He's an institutional guy. Put $440 million in Bitcoin when Bitcoin was at 11,000. Bitcoin went to 20,000. His $440 million was worth $1 billion. And Bitcoin dropped to $17,000 and the headlines came out. Michael Saylor lost $180 million in a day. Idiots. Press people just kill me. He didn't lose. His assets were down. Same for any of you. If you own Bitcoin at 60,000 and it drops, you don't lose. You only lose if you sell. So you didn't lose when Bitcoin went down. Bitcoin just dropped in value and then it can come back up. We hope it will and we believe it will. That's what this is about. So now there are programs, though. Michael Saylor said something again the other day, and I've said this for a while. He'll never sell another Bitcoin. Why? Why should he? I was just on a conference earlier, And a 23-year-old kid said, oh, I've got this amount of money. Should I invest in Bitcoin or buy a house? And I said, both. And he goes, well, what do you mean? The programs, this is where I'm getting, this is why the holdings becoming even more prevalent. There are programs now where you can take your Bitcoin, deposit it as a qualified asset as collateral. So if you put $100,000 of Bitcoin in with something like Celsius or Abra and Bill Barnhart, you can now borrow 30 or 40% against your Bitcoin. What does that mean? Think about it. You don't have to sell your Bitcoin to go buy a house or a car. And you don't have to just buy a house when you wanted Bitcoin and it's going to go up. You now have the opportunity to put your Bitcoin in a collateralized asset, take a loan and buy a house, and now you own both. You own Bitcoin that we believe will go up and appreciate, and a house that you own and will appreciate. You get a double benefit of an asset that hasn't existed before. Like, fascinating stuff. So this number 8, long-term holders, people holding, not trying to sell, is really going to drive the price up even more. Why do I think the price is going to keep going up? Start putting it together. Retail investors, more people, more wallets, small dollars, institutional buys, more and more money coming in, companies, hedge funds, pension funds, supply limited because Bitcoin doesn't create as many, less people selling. All of it starts driving it up. Number 9, we're almost done here. The trend is your friend. In investing in stock, there's a stock out right now, not a stock, I apologize, a crypto token called Doge, D-O-G-E. Some people call it Doji, some people call it dog or doggy. Any of you guys that are actually in crypto have seen it. It's this little token with a picture of a dog, like a husky, and Elon Musk promoted about it or tweeted about it and created a meme. Doge has gone amazing. It's gone from a penny to 30, 40, 50, 60 cents. I think I bought it at, I don't even remember. I think I bought it at 7 cents. But the trend is your friend. As more people were investing in Doge, and Doge is going up, more people are like, oh, I should get in because it's going up. And it's not just crypto. That's how it works in stock. That's how it works in momentum. You know, that's how it works in Apple, and that's how it works in Tesla. That's how it works in different stocks. Again, the difference is, let's go back. New York Stock Exchange has bigger companies, less volatility. NASDAQ, down here at the OTC level, the over-the-counter, the penny stocks, the micro caps, those particular stocks have high volatility, high risk. If you buy a stock on the OTC exchange, the penny stocks, you buy it at 10 cents because you hope to sell it for $1. You don't buy it because you have equity. Everybody goes, oh, well, at least I have equity. You're kidding yourself. If you put 10 cents in a penny stock company that claims they're going to find gold in a mine in Australia, if they find gold, that thing might go to $1. And if they don't find gold, you're losing all your money, regardless of whether you have equity, you're not getting your money back. Like, that's just the reality. I'm not putting any of it down. Let's just be honest. We buy something because we buy it at 10 cents. We want it to go to $1. If we buy Apple at 130, we'd love for it to go to 1,300, but stocks at that level don't move as fast. But you can play into momentum. Right now, there's a lot of momentum around Bitcoin. More and more people are talking about it, more people trying to understand it. Now, again, you've got your detractors around the edges. Oh, the government's going to regulate it. Oh, banks are going to get regulated. First off, the problem is Bitcoin's not, in my opinion, could be wrong, Bitcoin's not a cryptocurrency, right? The reason banks are involved now in these cryptocurrencies is because the idiot people, and I was there in the early days, I can't call myself an idiot, but it sort of got misnamed. You're looking at a token like Bitcoin as a cryptocurrency, EOS, Stellar, XRP as a currency. So the theory is, oh, as a currency, they might be payment. And as a currency, therefore, they should exist and be held at a bank because banks own currency. There's the problem. These tokens, in my opinion, are not currencies. They're glorified penny stocks. You don't go buy a stock on the OTC market and put it at your bank. It's called custodial. Banks hold money, custodial accounts, Schwab, E-Trade, Goldman. There's custodial accounts that hold custodial assets like stocks. and bonds, or your gold certificate. Banks don't. So banks are looking into holding cryptocurrencies. I think the government, if they pulled their head out of their butt, would say, wait a minute, banks shouldn't touch stocks because they've been separated any more than banks should touch cryptocurrencies because they're not a currency. So once we start getting the regulations figured out, you're going to end up buying a token. It's going to be on an exchange held in custody. And if it goes up, the people that are going to put their hands in the pie are the IRS. Banks are trying to figure it out now for the wrong reason. The IRS is going to figure it out for taxes. But my point is the trend is your friend, meaning more people within the world and the industries are trying to figure out Bitcoin, crypto, tokens, are trying to figure out this world of digital assets and settlements. The more people that are trying to figure it out, the more publicity it brings, and the more publicity it brings, the more people it brings who want to not get left out. So the trend is your friend if you understand long-term where it's going. And number 10, this is my favorite one. Publicity drives egos. Decisions, big names drive awareness just to justify their decisions. And what do I mean by that? Again, 2020, this wasn't happening. Now it is. If I say, oh, well, Elon Musk put, $1 billion in from Tesla, people are going to go, yeah, of course he did. Michael Saylor put $400 million in for MicroStrategy. Yeah, of course he did. Anthony Scaramucci raised 500. Yeah, of course. No. You and I putting money in Bitcoin, we could jump up and down all day long. We could talk about it. We could do our little podcasts. Nobody's paying attention to us. Not in a bad way. We're important too, but the level of publicity access ego is different. If a Scaramucci puts money into Bitcoin, his ego is going to force him to justify that decision, which means now he's going to be on CNBC and CNN and Fox, well, not Fox, because any of you that know Anthony, I love him. He had a little Fox problem, a little Trump problem, but Scaramucci's out there justifying his decision. That's a big personality with an ego who has to justify his decision and rationale to invest in Bitcoin. So now you have big players on big platforms. You've got, every now and then I'm texting with Kevin, Mr. Wonderful, Kevin O'Leary's trying to figure out Bitcoin. He wants to come in like, Mark Cuban's trying to figure out, he's figured out Bitcoin and now NFTs, all of this, as these big personalities come in and they start looking at it, they have to justify their decision. Now, some of these guys, to their credit, like being on the front end. They like being on the edge. The Elon Musks of the world, the Cameron and Tyler Winklevoss, right? The Scaramucci's, the Mark Cubans a little slower to the table. And then you got the Ray Dalios and the skeptics who are finally coming around, the Warren Buffetts, this will never work, crypto's a scam. Those guys will eventually have to come around if it works. But these big personalities are driving awareness, they're driving adoption, they're justifying their decision in a way that's lending more credibility to the industry as a whole. And so that's what I mean when I talk about Bitcoin. I think it's going to continue to go up. Let's draw some little math and then I'll be wrapping this up on time. Bitcoin, $60,000, one unit. It's got $1 trillion market cap. 60,000 for a Bitcoin, one unit, market cap $1 trillion. Gold, brick, $600,000, right? Bitcoin, gold, to me they're the same, one unit. The market cap for gold is $10 trillion. If money starts moving out of investing in gold, stocks, bonds, treasury, if that money shifts up to Bitcoin and Bitcoin price goes up, if Bitcoin goes up to gold, meaning its market cap grows from 1 trillion to 10 trillion, the price of Bitcoin should correspondingly go from 60,000 to 600,000. When you see people online saying, I predict Bitcoin's going to be 250,000, I predict it'll be 300. The skeptics go, that'll never happen. They don't understand. And for normal people, you're like, $300,000, gosh, why? That makes no sense. A brick of gold, $600,000. You've got to think about it differently. One brick of gold, 600,000, but if you can't afford a brick, buy $60 worth. One unit of Bitcoin, $60,000, who cares? If you can only buy 50 or 60 or $100, buy it now under the belief that it's going to go up over time for all the reasons I laid out. And I think if I go back, let's go back. Hopefully this doesn't get anybody dizzy. Here we go. There's my closing. I should have had it at the end. Global access, it's traded 24/7 across continents. Record number of addresses, it's getting easier to onboard. So that's increasing the demand. Mobile wallets means even more retail people come on, more people buying. Small dollar denominations, more people can buy because it's a smaller unit. Now you close the wealth gap. Institutionals have to start buying in. That's big money. Limited supply means more demand, less supply, price should go up. Long-term holders, now you've got more demand and less people selling. The trend is your friend, and then you have ego, personality on top driving the whole thing. That's why I think Bitcoin was going to hit 100,000 in 2021. Again, I did that December 14th when it was at 20,000. Today it's at, I would say 60, 50, 50. I don't even pay attention, but I believe it'll be 100. I believe it'll be 200. I believe Bitcoin will probably get to 500,000 or 600,000 within a couple of years. Not that I'm some Pollyanna person. I'm looking at fundamentals. And then the last thing I'm going to leave is with this. I get asked a lot again, weird questions. Are you a Bitcoin maximalist? And I can't have everybody raise their hand. If I had you on video, I'd say, hey, raise your hand if you've heard that. Are you a Bitcoin maximalist, Stephen? And my answer is absolutely not. That's the dumbest question ever. And I don't mind saying dumb. Some people think I'm dumb, but who cares? I don't like everybody. Everybody doesn't like me. That's the world we live in. Bitcoin maximalist means, do you believe Bitcoin is going to be the only winner who has conquered all other cryptocurrencies? It's a false misnomer. That's like saying, do you believe gold is going to be the winner and gold beats out all of the thousands of stocks on the stock markets? Right? The New York Stock Exchange, New York, the NASDAQ, there's thousands of stocks over here. Stocks are an investment tool. They go up and down. The cryptocurrency tokens are like stocks. Bitcoin's like gold. Do I think gold is the global winner for investments? No, gold's an interesting asset. And that's the article I have coming out. I'll share with some of you guys. It says, if you're trying to figure out Bitcoin, it's great. Trying to figure out Bitcoin for an institutional person, in my opinion, is like trying to figure out gold and you completely miss the stock market. That's where the differences are. Bitcoin's an amazing investment. I believe it's going to go up. Hopefully this helped. But the DeFi, CeFi, these exchanges, the Coinbases of the world that just went public, all Coinbase is an exchange that trades crypto tokens, just like the New York Stock Exchange trades stocks. It's no more complicated than that. So hopefully that helps. I'm going to stop the share here before long. I'll try and open this up to a few questions and answers. We've never done a Zoom this big. So, but again, Steve and me, Bullseye Guy, do I have a close on this? I don't think I do. I'll leave with that one. I'm going to do a stop here, come back on, and I'm going to attempt to allow people to unmute if they choose to. So if you guys have questions, try and jump in or put your questions in the box over here and I'll answer it to the group. If I don't get many questions or hand raised, that either means I'm a complete wacko and crazy or nobody understood what I was talking about. And it may be one or the other. So any questions? Dr. Hari.
Yeah, Steve, and I have one question for you.
Sure.
Thank you for accepting us in the late registration. I have a couple of friends also joined us today. So question to you, if somebody is new to this and how they can get started to acquire some of these cryptocurrencies?
Well, so there's a lot of what I call wallets out there that are very simple. Abra, I like promoting or presenting ones that are friends of mine. So Bill Barnhart, Abra, A-B-R-A. It's a simple app on your phone. You download it and register, and then you attach a credit card or your bank account, and you decide how much money you want to put in to buy a token. So if you say I have $1,000 and I want to buy all Bitcoin, you attach your credit card or your bank account, it goes in, and then you buy Bitcoin just like you would do if you were signing up to Schwab or E-Trade, you would sign up to etrade.com. You'd attach your credit card or your bank account. You'd put it in and you say, I want to buy Apple, or I want to buy Amazon, or I want to buy a mutual fund that invests in a bunch of other things. Crypto is that simple if you think about it simplistically. And so there's wallets out there. Abra, Voyager is a great one. BitKeep. People just find a wallet they're comfortable with, attach their credit card or their bank account, and decide which crypto they want to buy. Again, though, to me, Bitcoin and some of these are more low risk long term. There's others like Link and EOS, and any of you that are in the space would look, it's, they're a little less volatile, but still a good return. And then off on the high risk are, Dogecoin and WazX and a bunch of ones that are high risk. But you just as an investor have to decide what you want your allocation to be. What do you want your risk to be? And you buy a token through that wallet, just like you would buy a stock through E-Trade. Mark, you have your hand up?
Yeah.
Hey, cool. I like how you raise a hand. Mark's a professor. He's got a great group he runs called CEO, invitation only, got a recruiting firm. He knows how to use the platform better than me. So go ahead, Mark.
So I was thinking, as you're talking about, where you're thinking like treasury and cash management for corporations is going to have to make some allocation towards Bitcoin. I'm going to dispute that a little bit. And even if they do, it's going to be like something small that they have to, they're answerable to the shareholders that, it's like, well, we're looking at a hedge or something. They would be better off like putting it in Japanese yen. That I just don't see them being a big purchaser in the market. Yeah, I saw like MicroStrategy did with Michael Saylor, but I just gonna have to say that that aspect, I think it's gonna be a challenge.
Yeah, and I appreciate that, Mark. So again, what I was saying is, if a company looks at a small percentage, they're not going to put all of their cash holdings in Japanese yen or the ruble or the rual, or but if they look at a small percentage that might have gone to gold or bonds, does a percentage of that, instead of going to gold or to bonds, go into Bitcoin because they think that's an asset that might have a little better return? So I don't ever think it's going to be all, but as a percentage of the asset class decision, I think it'll get there, and it's already happening, but it's never going to be all of it. Sandeep's got a question in here that I want to answer. It says, wouldn't Binance or Coinbase be better option to trade Bitcoins instead of directly using a wallet-based app? And again, all of you guys that know me, I'm specific on terminology. That's why I'm called the bullseye guy. Words matter. The key word in there, Sandeep, in my opinion, is trade. Trade is different than hold. If I'm just going to buy Bitcoin to hold it, then a wallet will serve me fine, and actually might serve me better. My fees might be lower to just purchase in a wallet. If my intention is to buy and hold Bitcoin, or to buy and hold EOS or Link, I don't need an exchange platform necessarily. I just need a wallet because I'm going to buy and hold it and then one day decide to sell it. If I want to trade, then having an exchange like a Coinbase or Binance, you can't do Binance in the US anymore. You have to do Binance.us because there's some limitations. But yeah, if I actually want to trade that asset, then an exchange would make more sense. And that's why we joined Centurion Invest out of Dubai. So trading to me is different than buying and holding. The question that Dr. Hari asked was, how does somebody buy the asset? And so that's where I drew the distinction. If you're buying to hold, a wallet will serve you fine. If you do want to trade, then you need an exchange platform to be able to trade. Hopefully that helps on a distinction. Hey, I got it from Sandeep. Thank you. But I like those questions because I like to try and provide, clarity, because a lot of times it's, the terminology, that same word means 9 different things. So any other questions? Brenda just put one in here. Should beginners stick with ETC versus BTC Cash or BTC wrap? Again, Brenda, it's a question about, I don't know the answer to that because I don't really trade the cryptos per se. I bought a bunch of them in 2017 and 18 in the early days just to see how it worked. So in the early days, I bought EOS and Stellar. I've got XLM and Tron and Cardano ADA and Ethereum. I bought a bunch of them and I just bought them and hold them. I've only traded two. I actually bought XRP at 18 cents. I sold it at $3 and I bought back in at 28 cents. And I bought EOS. I bought EOS at $4. I sold it at $9. It went to 15 and I thought it was going to go to 45. I bought in at 15 and EOS is down at 3. So I'm the wrong person to ask about what to invest in or when. To me, it's more about what's a strategy. Bitcoin to me is a long-term hold. I own it. I don't ever want to sell it. Now, I will say this, just interestingly, I moved a percentage of my Bitcoin holdings over in January to a broker who's trading it. So I took a percentage and said, hey, I'm willing to risk all of this. If I lose it all, it's okay. It was risk capital and I moved it over to him and I'm allowing him to trade my Bitcoin into early stage crypto tokens, high velocity. He's doing some futures trading. He's doing some really aggressive, creative things. And every day I open the account, in my head, I'm like, it's going to be zero. I open, I'm like, it's going to be zero. It's going to be gone. The exchange is going to be hacked. I'm going to lose all my money. This is a scam. Like, I have that expectation. But he's up in my account since January 9th, 780%. What's he investing in? I don't know. Sometimes I go look and like, I don't recognize half of the things. So I don't have a good answer because I'm not an investment broker. I just sort of understand how they work. I don't know which ones you should play. And looks like I got another question here. I think for some of you, the mics are turned off, but if you do like Mark did, if you raise your hand somehow, I can see you and actually call on you if you want to say your answer rather than typing it. But Tashama Williams says, I've heard horror stories of people losing their Bitcoin key after value increase. Not exactly sure what this means. So again, Tamasha, this is what I said, where cryptos in the early days, it's scary. Like we had Bitcoin on thumb drives, like a little treasure drive. Every time I plug that stupid thing in my computer and have to plug in a passcode, I'm thinking it's gonna be gone. It's gonna be broken. It's zero. Like I didn't forget the passcode, but I always think that stupid drive's gonna be gone. Or if you lose your wallet, a passcode is basically 10 or 15 or 20 words in a sequence. So again, that was my example earlier. Imagine if you had your money in a vault with a combination lock. And if you die, nobody knows that combination. They can't get in. That lock, there's no key that could break into that lock. It's like the most secure padlock in the world that nobody can break into. If you die and something happens, nobody has that combination. Those funds are there and gone. If you lose that combination, that 10 or 15 or 20 digit passphrase, you cannot get back into those accounts. And now that's changing finally, where when you onboard with a wallet like an Abra or an exchange, you have to do something called KYC, know your customer, which means you have to send in a picture of your ID. Sometimes you have to hold your ID up and then they'll send you a note back and say, write on a paper this digit. And you have to hold up a piece of paper with a number to prove that you're real. The reason they're doing that not only is to stop money laundering, but eventually if you lose access, you should be able to validate that you are the real person if you've lost those keys. We're not quite there yet, but we are getting there. But yeah, the keys are important, and storage of Bitcoin's been a challenge for a while. Does any exchange or wallet offer to buy or trade using a Roth IRA? Mark asked that question. I think so. I believe there are some IRAs now and some qualified accounts that will allow you to purchase Bitcoin or crypto within the structure of the Roth or the IRA. I'm not an FAA. I'm not a registered financial advisor, so I don't know that answer directly, but I have heard that I believe that's happening, where you can have your qualified IRA or your Roth, and Bitcoin can be an investment holding within there to potentially grow tax-free, but I don't know the answer on that directly. Mark, you sent me a message directly on NFT. Did you want me to answer that? I don't know a whole lot about it, but Mark Landy sent me a message on what are my thoughts on NFTs, non-fungible tokens, like the NBA and the baseball cards. I don't know a whole lot about it, so I don't like to overly pontificate on things. To me, a non-fungible token is like I use the word glorified, and I don't mean bad. A non-fungible token is like a serial number tied to an asset. It's like authenticating a baseball card. So here's the baseball card. I have a certificate of authentication that this card is real and has a signature. Well, over time, those certificates have been able to be faked, or that card might have different certificates attached to it. A non-fungible token can say, this asset is the only one, and this serial number is attached to this asset, and that's it. I think there's some interesting things. Again, non-fungible tokens, retrospective evolution, it's like a ticket. If you buy a ticket to go to a ball game with Mark Cuban at the NBA, that ticket's got a barcode on it. And the minute that barcode is used at the stadium, you can't run printed copies of that ticket and have it duplicated, because there's only one ticket and one barcode for you to get in put your butt in the seat. That's a non-fungible token. If you look at it, it's just a different way to look at a barcode tied to a unit, to a specific action. I think it's kind of the same thing. But again, I'm not overly tracking it, so I'm not sure. And Mark says NFT is like a snowflake, meaning there's only one, or meaning it disappears if it gets too hot out. I'm not sure what you mean. It could be either. Because I heard in the early days, I think they're fixing, if you had a non-fungible token address that goes to, Mark Landy's picture, so you own the picture of Mark, the NFT pointed to the asset. If that asset moved, if it was hosted in spot A, if it moved to spot B on the server, your non-fungible token pointed to an asset that no longer existed. So the asset could move locations because the NFT was tied to location, not asset. I think some of that stuff is being fixed, but again, because we're still recording this, I don't want to say things that will make me look overtly stupid on things I don't know about. So, all right, guys, anything else? A couple other questions? Otherwise, we'll wrap this up. I appreciate all of you guys being in on this. Which country appreciates Bitcoin the most or uses it the most? Coming from Brenda. Boy, I'm not sure I know the answer. Like the United States, in my opinion, appreciates, they don't use it. Like, again, the terminology used. I think Bitcoin has a lot of momentum in the US because of people having access to technology and understanding and buying things. I think China's got a different use for it within the populace of what they're using it for, to try and move money. I think India and some of these other regions are going to come on because it's an asset, it's an investment class where they don't have access into bank and systems and things like that. So I don't know that anyone appreciates or uses it more. It's a global phenomenon that has different functionality. And I don't know who's off of mute, but be careful, iPhone 2, if you're off mute, because we can hear you. But if you have a question, let me know. Danny, you've got your hand up. I appreciate that. So unmute if you would, and let me grab the question from you. Danny, you still there? We'll give him time to find his mute button and come off. All right, we'll come back to him. Danny, if you come back and have your question, let me know. Let's see, Danny. Oh, your question's in here, Danny. If this is it, I'll try and answer it. Is it possible the government will come up with their own token, give the public tax benefits to use their coin, and everything else will disappear? Great question, Danny. And I've got a 3-part answer, and then we'll wrap it up and we'll have this thing and have everybody out of here on time. Yes, no, maybe, and yes. So let's take it in stages. Number one, if you right now in normal transactions, if you get direct deposit from your bank, right, from your employer does direct deposit to your bank account, and you run around with a debit card, that is digital money. We're kidding ourselves, like, oh, money's not digital. A debit card is nothing but digital money. Now, how that money is treated in the bank system is a little different. How they actually move that theoretical money around is the way the legacy world works of ACH and SWIFT and FedWire, all of these banking systems. But money's already digital. It's direct deposited into your account. And you have a debit card, that's digital money. So I think the governments would love to go to all digital, because I'm going to answer that and then I'm going to tell you how they'll get there a little differently. If all of money was digital, Danny, they would know everywhere you go. You wouldn't be able to say that you don't live in California, you live in Arizona for taxes, right? You wouldn't be able to say you don't live in New York and you're really down in Florida. If everything's digital, the government knows where you are, what you're spending money on. They can now credit score or rate you if your accounts are being done at 2 or 3 in the morning, if you're buying too much, I was going to say Coke, as in sugary drinks. This is where it gets dangerous of government theoretical conspiracy oversight, is if the government's paying for health insurance, which is what they're trying to do, and the number one cause of obesity is sugar, and all your money is digital, the governments could stop you from buying Pepsi or Snickers at the supermarket. They could stop you from spending money late at night because you shouldn't be out. So I think governments would love that kind of control, and that's a very scary premise. Now, whether they would give you tax benefits or things, no, I don't think the government's going to incentivize us to do anything. I think they're just going to keep taking away our freedoms and liberties down this digital road in a way for them to manifest control and tax. If you no longer have cash, you can't tip the restaurants in cash, you can't pay your hair salon, like everything's going to be trackable, which means it can be controlled, it can be monitored, and it can be taxed. You may think that's too intense, but that's why I think they would love to go there. That's why China is trying to move there. This concept of what's called a CBDN, a central digital banknote, is banks are trying to go digital. They would love to go digital for this aspect of control. But there's a different one. And again, I want to be respectful on time here. There's conversation of what's called stable coins. So I'm switching gears on you, Danny, a little bit. If I want to send money to, I'm going to use Mark again. He's my buddy. He's still here on screen. If I want to wire transfer $50,000 to Mark for business services, I have to go to the bank, fill out paperwork. I might be able to do it online. I have to pay $30 for the privilege of sending my money to Mark. And if I beat the cutoff at 2 o'clock, I hope it gets there the next day, but it probably won't. It'll get there in 2 days. And Mark has to go to the bank and pay $30 for the privilege of getting money that I just sent him. Why is that? That 50,000 theoretical dollars, not cash money, it's sitting in a bank, is earning interest for the bank. So the banks all want to sit on it as long as possible. And as the bank's moving through the network, in the SWIFT network, everybody's making money. Even if they hold it for 15 minutes, it's earning interest. So the banks have this legacy way of moving traditional cash around. Even though it's digital, it's still legacy money. If I want to send $50,000 of Tether, the USDT token, the dollar token that Brock Pearson, the guys created, I don't need the bank's permission. I can just email it to them. Now, unfortunately, it costs about $30. Like, it's expensive all of a sudden again, but I can email digital money to Mark. It'll be there in 15 or 20 minutes. I don't need anybody's permission. Here's where I think the banks are going to go with stable coins, because the banks still will provide a service. You're going to have money in Wells Fargo. You have $50,000 in your Wells Fargo account in cash. You're going to down convert it to a WFT, a Wells Fargo token. That token is going to be what's called a stable coin, or a digital dollar. It exists on Ripple, XRP. And you'll wire that digital dollar, that token, that stable coin, the WFT, you'll wire it to Mark Landy at Chase. It'll hit the Chase account and it'll swap. It's called an atomic swap. The dollar Wells Fargo token will swap to a JP Morgan token, which is built on Stellar, same dollar. And now it exists in Mark's account as a digital dollar. And if he needs it, he'll convert it up to cash and use cash. And the fees will be smaller. The money will be there. So banks are going to have to move to digital for settlement, but they're going to provide it as a service. So I think the digital dollar has different purposes. The government would love all digital for control, but the way money will be moved around, digital dollars and settlement, is why banks are also trying to figure out central digital banknotes. They want a more efficient way to move money than the old systems, but the governments want control. So governments control, banks efficiency. That's it. All right, guys. Appreciate your time. Thank you, everybody, for coming. I hope you enjoy. If you do, shoot me an email or something. Let me know if this helped, if it didn't make sense and you have questions, or if you have ideas of things you want me to do in the future. I always have these kind of topics. But again, thanks everybody for participating. And Steve and me, the Bullseye Guy, we'll see you soon. Thank you.